So getting married is something I didn't think that would happen to me so early, but it has happened. So it's a little bit different from before because now you have a partner. I always had a partner, but now you're like legally binded. But nonetheless, I think that's a new milestone in life that everybody goes through, or most people will go through as well.
I'm for real.
And that being said, being married changes a lot of dynamics, not only financially, but also with your loved ones at home, your family, as well as your friends. And for me, I think the biggest change here will actually be the personal finance portion, because a lot of things will have to take a backseat for now. So for example, I might have to move my riskier investments into mid-risk investments, and then increase a little bit more on the safe investments. So this way I'm able to prolong some longevity. In the future, if I have kids, then that is something that I'm prepared for.
What's so hard to believe about that?
Because the last thing you want is to have a kid and not be able to support them financially or emotionally as well. So what happens to the personal finance side of things is, so things like crypto might have to hold a little less percentage now.
We like wealth and good fortune.
And the excess amount will go into something like stocks, where they carry a mid-range of risk. So like stocks like ETFs, those are things that I want to buy for a longer term and want to have for a longer period of time. And then excess cash will be put into savings that are a little bit, doesn't yield as much, but you still get a safe return in some sort of way. And at the same time, I think cash flow is going to be something that's really, really important these days, because getting married, cash flow is going to be something that you will need to move on with life and being an adult now. So on top of the savings, I think what's next is also, if you are in Singapore, I think the next step everyone knows is you're going to get a house, you're going to get the BTO, and that is going to cost you money as well. Those don't come cheap. Like the unit I got is about 600 over 1,000, and that is a stretch, man. It is a stretch. But then for us in Singapore, we do have things like CPF that helps cover a little bit here and there. So if you still have a day job, CPF is a good way to actually churn some money. In the event that you're looking to buy a house, you could use that CPF to pay off the house as well. So talking about savings, like I mentioned before, I'm moving some of my crypto into a little bit safer investment. And a couple of days back, I came across this platform that is pretty new in Singapore. They actually approached me. So this video is really talking about my experience with them. They are not paying me to do this video as well. So the platform in question today is actually called Hodlnaut. So what Hodlnaut does is actually they lend out assets that they receive to vetted financial institutions, and they pay an interest. So what are these assets? These assets are crypto assets, so things like your DAI tokens, your Ethereum, your Bitcoin, your USDT, your USDC. So when you deposit these assets, crypto assets in, they pay you an interest based on the assets. So the interest they pay, they are pretty high. Like Bitcoin, you're getting like 6%. USDT, USDC, you're getting about almost 10%. And this raises a question, right? Like, how can you sustain such high interest rates to pay out to your investors or your borrowers? So Hodlnaut analyzes the supply and demand on the available crypto assets that they have, and they set a fluctuating interest rate which fluctuates every single day or every single month depending on the supply and demand in the market as well. And they also take earnings from the previous month into consideration, so this allows them to lend out even more crypto assets that is able to generate even more interest for people like me and you. So I think one of the biggest questions we always have is, so what if the loan was given out but it was not returned? So I think that's a very, very big question as well. So loans are over collateralized at 130%, and in an unlikely event that the borrower fails to return or defaults on the payments, what happens is that Hodlnaut will liquidate those assets to repurchase assets that were borrowed. And they do have like the legal systems all in place, and if need, legal action can be taken to get the money back from these borrowers as well. And on top of that, Hodlnaut will be taking on the loss if someone doesn't really pay back their loans, but they will take the loss and pay the users from their equity funds as well. So this is very similar to a platform that I use, that I'm currently using as well. So I'm using BlockFi. I think BlockFi is pretty cool, but something I noticed is that during the Bitcoin bull run, the price or the interest I was getting through BlockFi was like 6%. But then when the crypto went into the bull market, the interest actually dropped to like 5%, and this 1% is pretty substantial amount, because if you look at if you have one Bitcoin, for example, that is in BlockFi, and you're getting 6%, and then halfway through the year it switches to 5%, and that becomes a problem, because that loss of 1% is actually it's almost like 0.005 Bitcoin in simple interest terms calculation. And yeah, so you have the opportunity cost of losing Bitcoins, or not earning as much Bitcoins in that sense. So I think with these lending platforms, there's something to take note of, because the interest rates are always fluctuating, and these are all determined by the platform itself. So if you're keen to find out what Hodlnaut does, I've left links in the description down below, and if you top up your account with at least $1,000 worth of crypto assets that they support, they'll return you $20 bonus assets back into your account. So that's like a great 2% earn on the spot. And at the same time, all your interests are being paid on a weekly basis, and they do have a countdown timer that I really love, because you're able to see how long more before your next payout comes, and this compounds every single week. So this is probably a stream of income that you can think of if you're not into trading crypto like me. I don't trade my cryptos at all. Most of them are just sitting in my account, generating interest. So I think this is one way that you can look at to generate a little bit of passive income if you are into the crypto space and you want to reduce your risk as well. So I guess that's all for today's video. I'm gonna enjoy the rest of my honeymoon, and I'll see you guys in the next video.